Welcome to the Retiring Club. My name is John. I will be your host for this meeting. So, we've got a short week on the stock market this week. The market will be closed on Good Friday and we'll resume trading on Monday of next week. And it's been pretty big change in the investments. They're starting to come back in the portfolio. A couple of my investments in the accounts I have were at 100,000, and one over at Fidelity dropped below. It took a really long time to get those accounts up to 100,000, so I did not like seeing that. However, my investments are heavily weighed on the S&P 500. I've got dozens, probably maybe up to 20 different mutual funds that have the Magnificent Seven, which carry over 40% of the S&P 500, and they were down. Now they're coming back. And what that means is opportunity. It's opportunity for you to continue investing just like you've always been into those exact same mutual funds and buying the shares at a deep, deep discount. And in this meeting of the retiring club, we want to talk about dollar cost averaging. So, what we're going to do is we'll talk a little bit about we had the market fluctuations and we talked about the fixed income investments, which I am very, very strong on because I am 63. The first opportunity that I would retire would you would add simply 4 years, and that gets me to 67. That gets me to full retirement age. It will be in the first quarter of the year I turn 67. And with that, I would, be able to get a nice Social Security check. I get a small pension, not much, but it will be enough to help me pay down the mortgage. In the meantime, I know that anything can happen. So all money that's going in, except for what I'm about to show you in this meeting, is going into fixed income. I'm in the third year of collecting 4%. I just looked at every money market fund that I have in the short-term bonds, the government short-term investments with BlackRock, and I am getting an investment, and it's a substantial amount that will accumulate over the entire year. But in this meeting, we're going to talk about dollar cost averaging so that as an investor, even though the market is down, those shares that you are purchasing are going to be deeply discounted. And I'm going to go into a demo and show you how one of the investments that I earmarked for this year is going to work out well for me once it recovers. Okay, so I'm going to jump in and we're going to take a look. Okay, just stick with me. This is John, and we are in the retirement club. This is our meeting on dollar cost averaging. So stick with me. Okay, folks, we are back at the Fidelity account and we are looking at a Roth IRA. This Roth IRA does fall under the 5-year rule where all the gains as well as the deposit can be withdrawn tax free. The gain portion, I would need to sell some of the shares. So if we take a look at this account right here, we see that we started with $3,000 and $3,002. We got 202 and a half shares. Let me get this a little bit bigger for you. Here's its current value. So this baby is down 8.29%. Today's gain was 0.89. And here you have the last price of 13.59. Okay. So the way dollar cost averaging works is they take all of your purchases and the price that you pay and they divide it in such a way that it will show you the prices. So we're going to do orders first. Let's start with orders. We'll come out of that. And we're going to move this back. We're just going to go year to date. Then this is a new investment. This is one of my only real new equity. Everything else I do is in fixed income. So we had opened the Roth and then I funded it. Of course, they give you so many days, and this is the first purchase. So let's take a look at it. The first purchase, cash, we picked up 127.7 shares. Our price is $15.60 for a total amount of $2,000. Okay, that was the first purchase. The next purchase was a scheduled contribution of $500. And we got that done here in 1569. Remember that number, 1569. Okay. Picked up another 31 shares. So you could see how by me picking an investment that I believe in, that's in a solid industry and it's priced below $25, how I'm quickly accumulating some shares. And this was we picked this up last week. Now the market was down here. Look at what I paid for that. $500. I got 12.89 was the price, 38 shares, and I did $502. So that was the purchase price. And if we come back, we can see here it's showing its low, 52-week low, and the 52-week high. And my average using dollar cost averaging, where I'm making regular contributions, which is what you typically are doing in your 401k or 403b. If you're investing in something like this is in the financial sector. But if you're in the S&P 500 or large cap, you will see that you're actually making purchases on these shares, get more shares at a cheaper price, and then your average cost is here 1482. Now your price, last price is 1359. Once this rises to 1482, this loss will evaporate and be back at zero. And if it rises to say the $15.69, we will see a profit of about 5%. And if it gets back to its 52-week high, we will have even more. Okay. So this is how dollar cost averaging, even though the market is down and you're investing for the long haul, or if you got some particular goal like I do, you just put the money in there and you're buying quality shares at a discount. And now you probably, well, I see that you're losing money on this. Well, how do we know it's quality? Let's go back and see what this investment has done so far. Let's go and take a look at the history. So we got a little bit of a uh, interest off of the SPAXX. That's their Fidelity's money market. It's right below 4% is what it pays. And here on April 8th, I made this purchase. A couple days later, it paid out long-term capital gains of $40.10, short-term capital gains of $8.34, and then I received a cash dividend of $5.56. And there you go. I've only had this investment for barely, I got it in February and it's already reinvesting the capital gains. And what I got out of that, I picked up an extra 4 shares and it was at 13.28. And that again is dollar cost averaging. So there's two things working for me. The purchasing of those shares at discounted price, the reinvestment of the capital gains. So this is at the, $3,000 is what I put in it. Let's take a look at the summary here. And it should give you a nice, there you go. Here's that chart that I was talking about. This is the money here. It was just sitting in there. I don't even think it was invested. And then we bought the shares. This is the extra 500 I put in. And this is the track of it. And then it started going down. And then it went way down. And then it's back up, down, down. Now it's starting to come back. Okay. And so if we do year to date, let's see the year to date. And here's 1 month. Ooh, look at that baby tanking right there. So this is how you would accumulate wealth over the long term by making your contributions and getting these shares at a discounted price, reinvestment of your capital gains. Okay. And that's what I got for you. Purchase a 1289 38 shares, and then I got another 4 shares. So I picked up 42 shares ago with what I got. And this is what this investment's sitting at. And now what's going to happen is 13.59. It's my dollar cost averaging. Once that last price hits this 14.82, this $3,002 will be valued at 3,002. There won't be any losses. When it goes and it starts going up to its what I paid for the 15.69, or here at the 52-week high or higher, that's when this percentage is going to go up. That's when the value is going to go up. It's a Roth IRA. This money I put in and any gains are not subject to any taxes. So if it goes way up and I need $500, I could sell enough shares, pocket that money, and not pay any taxes on it. And that's why I'm putting all new money into these Roth accounts. So I don't have to be bothered with any taxes. You're not hearing me talk about no conversions. Just don't put any money in pre-tax if you got a ton of it in there. You're looking at right about last time I checked, I probably had 250 with the market going down, all pre-tax. I got to pay taxes on it. There's no sense in me putting any more money. I'll just work dollar cost averaging in this, and I'll continue to invest in money markets and government short-term notes where I'm getting 4%. So this is John, and this is the Retiring Club. This is our presentation on dollar cost averaging. Let me just show you this one more time. Purchases and reinvestment. Only had this investment for barely 2 months, and it's already producing capital gains. One of the banks listed investment firms had their first quarter report, and they made money and it paid it out to the investors. The rest of them will follow suit, and we'll keep an eye on this. Okay. So this is John, and this is with the Retirement Club. I'm going to come back and we're going to feature another group that explains this Roth very well. And I'll be right back. Thanks. Okay, folks, here we go. This is it, the Wise Money Show. Now, the gentleman right here, picture is Mike Bernard, but these guys are a investment firm, and they help people with their investments. In it's called Corehorn Financials, is what it is, I believe. And Mike Bernard is a specialist on the Roth IRA. And here it is right here. Like this video right here, he explains the whole Roth IRA and how it works. And these guys are really, really good resources. They go in and they start doing a deep dive. They do a lot of podcasts, and this is going to be really, really helpful. Your Roth IRA questions answered, like what we were talking. Look how that runs for 48 minutes. Tips for your 401k, your old 401k. They want you to don't just leave it out there. They want you to roll that baby over and start consolidating, because the 401ks are totally different than the brokerage account. The Those investments where it actually shows the price that you pay and the reinvestments of the capital gains. Look at your 401k and try and find that information. I wish you good luck. If you do, then you got a good plan, because I couldn't find it in any of my investments over the last year. But it's always spelled out in the online accounts that I maintain on all the platforms other than the 401k. So this is the Wise Money Show. This is a real good one because they do a deep dive on taxes. They cover everything. And these guys right here, I was listening to them, and that's when I found out about the health savings account, how you can do a one-time trustee to trustee transfer from an IRA into a health savings account and then spend that money to pay your bill. I had a surgery. My out of pocket was 2,000. I needed 2 grand to pay that. and I did the trustee to trustee transfer. I was allowed to say transfer up to like $3,650, and I did 3,600 to make sure I didn't go over, and I used it to pay my health care. Um, and it worked out really well. These guys got all kinds of little tricks that nobody talks about, and that's why I listen to all this stuff. And see how he's got all these topics here? You can go through and find and do a deep dive on anything you need. And that Roth is the big deal. Taxes are a big deal. This is new right here. You're only 6 hours old, okay? So the Wise Money Show and this gentleman here, Mike Bernard, specialist on the Roth. The other guys are also really good. So this is John. I'm gonna go ahead and end this meeting so I can go fix me a dinner. But it's tax filing day, and I wish everybody the best. And give me some likes, and leave some comments, and let me know if there's anything you want to do a deep dive on, because I'm going to start drafting something about pre-tax retirement for people who are unemployed and they need to get some of their money and they want to minimize the taxes. I'm going to work on that. Okay. So this is John. I'm going to close the meeting with the Retirement Club, and we're going to end now. Thank you.